Do you think you need thousands of dollars to start investing? A lot of people believe that unless you already have a big bank account, there's no point in even trying. But the truth is, you don't need much at all. Even with just $50, you can begin building wealth in 2025. In fact, starting small is often the smartest way because it allows you to learn without the fear of losing large amounts. In this video, I'll walk you through 7 beginner-friendly ways to invest right now. And make sure to stick around until the end, because the last method is one that could pay you back for the rest of your life. Let's start with index funds, which are one of the most popular and trusted ways to invest for beginners. An index fund is basically a basket of many different stocks grouped together to track a big market index, like the S&P 500. So instead of trying to guess whether Apple, Microsoft, or Tesla will do better this year, you automatically own small pieces of all of them, plus hundreds of other companies. Why is this so powerful? Historically, the S&P 500 has returned around 8 to 10% annually over decades. That means if you invest just $50 a month consistently, you could have tens of thousands of dollars after 20 years. The beauty here is simplicity. You don't need to constantly buy and sell or stress about which company will win. Index funds are a true set-it-and-forget-it strategy. Now, very similar to index funds, we have ETFs, exchange-traded funds. The idea is the same. You're buying a collection of companies instead of just one. The main difference is that ETFs are bought and sold on the stock market throughout the day, just like individual stocks. Let me give you 2 examples. SPY is an ETF that follows the S&P 500, so you get exposure to the biggest US companies. QQQ, on the other hand, tracks the NASDAQ 100, which is loaded with top tech companies like Apple, Nvidia, and Amazon. What makes ETFs great is flexibility. You can buy just one share or even a fraction of a share and instantly spread your risk across dozens or even hundreds of companies. For beginners in 2025, ETFs are one of the easiest and smartest doors into the market. Speaking of fractional shares, this is a game changer for new investors. Not long ago, if you wanted to buy a stock like Amazon or Tesla, you had to pay the full price of a single share, which could be hundreds or even thousands of dollars. But now, thanks to fractional investing, you can buy a small slice of that share for just a few dollars. Imagine owning a piece of Tesla for as little as $5. This is especially helpful if you're starting with limited money. It means you don't have to wait until you save up hundreds of dollars. You can start today, put in $5 or $10, and gradually build a portfolio of big-name companies you believe in. Now, let's take a step back from the stock market for a moment. What if you want zero risk, but still want your money to grow a little? That's where high-yield savings accounts come in. These are special accounts, usually offered by online banks, that pay interest rates of 4 to 5% annually. Compare that to a regular checking account, which pays you almost nothing, sometimes less than 0.1%. High-yield savings accounts are perfect for short-term goals or an emergency fund. You won't get rich from them, but you also won't lose sleep over volatility. And the fact that you can earn a few percent on money that's just sitting there makes them a very smart place to park your cash while you prepare for bigger investments. Another low-risk option is government bonds or Treasury bills. Think of this as lending your money to the government in exchange for a guaranteed return. For example, in the US, you can buy Treasury bills directly from the government with as little as $25. They don't grow as fast as stocks, but they're considered one of the safest investments out there. Why might this be important? Well, during times of uncertainty, stocks can swing up and down dramatically. Bonds and T-bills give you stability. They're like the foundation of a house. Maybe not exciting, but very reliable. Of course, we can't talk about investing in 2025 without mentioning cryptocurrency. Digital assets like Bitcoin and Ethereum have exploded in popularity, and they've also been incredibly volatile. The good news is, just like stocks, you don't need to buy an entire Bitcoin, which costs tens of thousands of dollars. You can buy a fraction, even $10 worth, and still participate. Crypto is exciting because of its growth potential, but it's also risky. Prices can double or crash in a matter of weeks. That's why my advice is simple. If you're curious, start small. Treat crypto as a side dish, not the main meal. A little spice makes things interesting, but too much can ruin the recipe. And finally, the most powerful investment of all, investing in yourself. With $50, you can buy a book, take an online course, or learn a skill that can pay you back for decades. Think about it. When you invest in skills like coding, video editing, or digital marketing, you're not just hoping your money will grow. You're directly increasing your ability to earn. The return on investing in yourself is infinite. Unlike stocks or crypto, knowledge and skills can never be taken away from you. They only compound over time just like money does. So if you're ever unsure where to put your next $50, consider putting it into your own growth first. So, those are 7 smart ways you can start investing in 2025, even if you only have $50 to begin with. Remember, the key is consistency. Start small, stay patient, and let your money work for you over time. Which one of these would you try first? Drop your answer in the comments. I'd love to hear your thoughts. And don't forget to like this video and subscribe to FutureProof Wealth for more simple investing tips every week.